You pointed out to me yesterday, I think it was, that the Meet Kevin ETF is now live. So Meet Kevin is a YouTuber who has more followers and viewers than Steve, me, Paul, and any other UK YouTuber probably will have put together and times by about 8. He's a hugely successful YouTuber, there's no two ways about that. Former real estate guy, attempted to run for governor, I think, of somewhere in the US, California sided or so, failed. But is now launching his own ETF. Former Millennial Money podcaster, I think, as well. Very successful investor, very successful YouTuber. He's got an ETF, and its main theme is ETFs need themes. It's an actively managed one, and its theme is quote unquote pricing power, which is a good thing to be looking for. I've got a quote here on the subject that said from him: the vast majority of companies we invest in, we're looking for positive cash flow, free cash flow, earnings per share, and growth. Anything that ensures these companies do prove pricing power. We're in a high inflationary environment. The States is still high inflation. I said it was coming down, and it is. But pricing power is an important inflationary thing. So, Steve, did you have any thoughts on this ETF, or what was your initial reaction to the discovery that this ETF exists?
Well, yeah. What? Yeah, why? And my initial reaction was, to be honest, I did hear about this before, but I'd forgotten it had happened. And then when he got arrested for drink driving, I thought, well, this is definitely not going to happen now. But here we are. So I mean, I've seen this ETF and I've seen the holdings in it, and I think it's frankly one of the weirdest things I've ever seen in my life. Like, I can't make any sense of the structure. There's companies in there where he only holds number of the stocks, and I hear you shouting at home saying, well, what if the Berkshire Hathaway A? They're not. They're invitation homes, and you can buy them for $31 a stock. It's like, why would an ETF with a £500,000 amount of money in it, $500,000, amount of money in it, why is it buying $61.98 of a stock of a house builder? 0.001 position. That doesn't make any sense to me, Steve. Is there anything in here that can you explain that, or is there anything in there jumping out at you?
There's stuff in here that jumps out at me, but there's stuff in here that confuses me. So I'm going to work from the top and make my way down. So there's 22% in Tesla. No real argument about that, for what it's worth. Don't mind this being heavily weighted towards something. Meet Kevin is a guy who has made a load of money on Tesla, I think. No reason. He would know more about that than I would. Second is Apple. And between Apple and Tesla's 22%, Apple's 14%. That's about 36% of your portfolio. So that's a good whack into those two things. I own Berkshire Hathaway. I'm not about to complain about people having top-heavy portfolios in Apple. The third thing on my on the list catches my eye. It's the US government's 2-year Treasury note ETF. Which is 8% of the portfolio. And then it's Taiwan Semiconductor, and then it's the Trade Desk, rounding out the top 5 at 7% and 5%. That third one catches my eye. Does a bond ETF have pricing power? In what sense does a bond ETF have pricing power?
I have no idea. To be honest with you, I don't really know how the Trade Desk has pricing power either, to be honest with me. They're an advertising platform at the end of the day. With a lot of competition, that doesn't tend to lend itself to pricing power. And the other one I've kind of noticed is Tesla having pricing power is something that's a little bit sort of up in the air at the moment. And I noticed that their percentage of EV sales in America has fallen again for the third straight quarter. It's gone from, I think they were 79% of all EVs registered last year. It dropped to 75. It's now 69. That's a 10% swing already. So I don't know. Does that signal that you have pricing power? I'm not entirely sure.
I think one of the things that I noticed from this, apart from my confusion about the bond thing, and maybe I've not looked into this carefully enough, that is highly possible, by the way. My research on this was quite limited due to partly a lack of time and partly a kind of lack of interest, because I think it highly unlikely that I will wish to add this to my portfolio for a reason I'll come back to. But I had looked down the holdings, and Steve, tell me about the first company you think of when it comes to pricing power, or what you think has pricing power as an obvious example.
So I guess the first one that jumped out at me was one that I think has just reached the peak of its pricing power. When I looked down this list, I was looking down for tickers that I knew, because it's all listed as tickers to start with, and Etsy was the one that jumped out at me because Etsy's ticker is Etsy. I looked at that and I thought, well, to be fair, they have flexed some pricing power this year. They've raised the prices on all of their sellers, and they've raised them by quite a large amount. But what actually happened when they did that was a lot of them threatened to leave, and a few more of them actually did leave. Now, Etsy reported a jump in revenue because not many left as the increase in the charge. But that doesn't show you pricing power. That just shows you that you raised the charges higher than the people that left. So Etsy for me is not one that has pricing power. I jumped to End Phase, which again is another stock that I don't think has pricing power. I think it's a solar inverter. I think it's pretty much a commodity market as far as I'm concerned. Solar Edge and End Phase. End Phase is doing very well. They're executing very well, but I don't think they've got pricing power. AMD, does AMD have pricing power? That's tough to say because realistically that's about the product, isn't it? If the product is good, AMD can charge for it, and their product has been good for a period of time now, but there was a period of time when AMD's product wasn't very good at all. So, yeah, I don't think there's a huge amount of pricing power here. To be fair, there was nothing that jumped out at me that said, these guys have real pricing power. These are the ones that are gonna win the day for him.
I'm not a huge pricing power expert on this. I think one of the lessons that I've been learning in 2022, and maybe we'll come back to this in a future show, is that fewer things have real pricing power, like ability to kick through inflation, than I realised. Basically, the obvious things to me that are able by basically law to pass through inflation is utilities, but he doesn't know any of them, as far as I can tell. I don't know what all of these are, but I don't see any there. They're allowed to just ramp revenues to pass on inflation and so on, but I don't think any of these is a utility. The things that strike me as the two most obvious pricing power things that come to mind when I think independent of anything, whether it's in the ETF or not, neither of them is in the ETF, and so I've either got something badly wrong here or Meet Kevin disagrees with me, and they are ASML, who I think can probably shove through prices basically anywhere, and Google. Because they have the biggest advertising platform, I get the impression they will push through costs and continue to have a product that no one else can match. Neither of those is in this ETF, and that somewhat surprises me. If anyone knows why or has anything else that I should look at on this subject, do let us know in the comments, by the way. But I was surprised to see neither of those two things there.
So one of the other ones that would have pricing power is any of the pharma companies that have a drug that has no competition that's still in patent. So, you could say Vertex Pharma with their cystic fibrosis drug. That will have a certain degree of pricing power. That would have been something that I would have thought I would have seen in here. And again, things like Bristol Myers Squibb is another one that they've got a lot of patent-based thing. That would maybe Starbucks as well. Starbucks may have a bit of pricing power. They've raised their prices quite a bit recently, and they seem to still have the footfall. But none of these are in this list, and that kind of. I mean, what about one of the exchanges like the Nasdaq or maybe the S&P? They would have pricing power because people need to list with the Nasdaq. They need to list on the S&P 500. None of those are in the sheet. We've got things like Sunrun, which I don't think has any pricing power at all as far as I'm aware. Solar Edge and Enphase, they're competing with each other. I don't think they have pricing power. I think they're commoditized. I mean, Lululemon. Do you think Lululemon has pricing power?
I'm not sure. Lululemon might have some pricing power when things go very well, which is kind of not when you need pricing power. I mean, they managed to flog a lot of stuff to people during lockdowns.
Yeah, true. I think this. I mean, if this is the best sort of 20 stocks you can come up with, it's a very uninspiring list. It's very Meet Kevin in that the top two are kind of what you would expect to be. Being Tesla and Apple, and I guess Autodesk to a degree may have a bit of pricing power. It is a pretty much a leader in sort of computer-aided design. I guess that has an element of pricing power, but I just found this like, God, if somebody said to me, I'm going to give you $500,000 to make an ETF, is this the list of stocks I would have come up with? I just don't think it is. I think this is a very generic-looking, fairly boring-looking retail sort of pie that you would see on Trading 212.
Yeah, I think there's a couple of reasons that I'm unlikely to put much into this ETF, if anything. Probably nothing, if I'm honest. One is that I'm not sure it's available in the UK, so that's a large issue. In fact, that probably makes all my other reasons kind of irrelevant. But here's another reason. I looked at the kind of managing fee charge on this. It's actively managed, so I suppose you might expect a slightly higher fee. But the fee on it, as I understood it, was a management fee of 0.77%. So just for context, Cathy Wood is 0.75. So this is slightly higher than ARC and all of its research, and you can think what you like about ARC. You can think it's great, you can think it's rubbish, you can think it's somewhere in between. But I view them as a serious research outfit that produces serious stuff about serious stocks, and sometimes they're wrong, and sometimes they're way too correlated in their holdings and so on. But this is not cheap. And one of the reasons I'm not buying this is I balk at paying 0.77% for something unless I have a really, really firm idea that it's going to be worth it to me. I'd much rather buy Berkshire Hathaway's lopsided portfolio for a fee of nothing to start off with.
Would you sooner have your money in either ARC or Meet Kevin's ETF, or would you sooner have it in a 0.25% savings account?
That is a good question. I would take ARC or Meet Kevin over a 0.25 saving account. Assuming I get to hold it there for, long enough for them to try and recover out of this ditch that they're probably both in.
50 years.
The other reason I was after this is that I quite like the idea of an inflation busting ETF. This makes a lot of sense to me, but there are two ways to kind of fend off inflation. And by the way, as far as I can tell, the pricing power thing isn't necessarily just to do with inflation. That's my thinking about this. But there's two ways to basically fend off inflation. Inflation is prices rising, and the reason that's bad for businesses is their costs rise. So their cost of buying stuff rise, their cost of paying people rise, their cost of producing stuff, manufacturing, all that kind of stuff goes up, basically. So then you have two choices as a business. You can either try and push your prices up and hope your customers don't run away, or you can take the hit and you can make less money, or you can kind of do a little bit of both, basically. Those are not the only two options. You can fit somewhere in the middle of those. The other way, though, to try and fend off inflation is to just buy businesses that don't have massive costs and therefore don't have that much to try and pass through one way or another. So good examples of these are stuff like franchises, like McDonald's, or quite a few things like Airbnb, I think, is a decent example of a franchise. So they don't pay anything to acquire a hotel or hotels, buildings and so on. They don't pay anything to run those. They leave those to the operators. Someone else takes all the costs and they just take a cut out of revenues and so on, which means that, okay, if the cost of running a B&B of some sort goes up, the hell does Airbnb care? If someone hikes revenues, great. If they don't hike revenues, oh well. Incomes are kind of similar amount of revenue stuff here. So I guess that would be my kind of preferred way to try and fend off inflation, trying to build a portfolio out of stuff that basically has very low capital costs. So in other words, if you don't have to pay for very much stuff, you're not that much bothered about the cost of paying for stuff going up, because it doesn't affect you too much.
But this actually brings up a notable admission from that portfolio, really, is the fact that Airbnb out there, considering he's into his real estate, you would have thought that those two would correlate pretty well. In fact, there's really not a lot in there in terms of real estate. There's just two companies with $60 each in them, which doesn't seem like that's not staying within your circle of competence, is it?
You mentioned Invitation Homes. That's a REIT that specialises in basically houses. What's the other one, Steve?
American Homes for Rent.
I do not know what that is. I suspect it to be another thing of broadly similar structure.
I don't know what it is either. It's a real estate it's a REIT in California. He maybe even owns it himself.
Yeah, fair enough, I guess. That might well be the case.